Hey everyone, this is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we show you the stocks that will be featured in this recording. And as a reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature on the recording. All right, so let's start talking about the markets. Well, we had a down day on Thursday and then back to the upside on Friday. So what's going on? We had a move up on Thursday, and then Ashkari came out and started saying that I'm not sure we need any Fed cuts this year. And then this morning we had the non-farm payrolls report that came out. And if you looked at the first blush, the headline number, it looked really hotter than expected because only 200,000 jobs were expected. We came in over 300,000. And you might be wondering, well, why in the world did we rally today? Well, the important thing to look at is the average hourly earnings. And that component shows that we're moving lower. So that's where the inflation aspect of the jobs part comes in. So it's not adding jobs, it's is there creating wave pressure in adding those jobs. So it's great if we can have a lot of people employed and unemployment went down, as long as there's not wage pressure, because again, that's where the inflation part comes from. So that allowed us to move back to the upside today. So looking at the chart of the S&P, the key here that we want to look at is 520. That's the level that's important. We've talked about that over the last couple of weeks. We went up, it was resistance through most of March. Then we broke above it towards the end of March and kind of hung there. We broke below it and closed below it yesterday. Now, today looked like a really good day. It looked like a nice bounce back day. But when you see where we closed today, we closed right at 520. So my point is, be careful. Don't get too bullish too soon that, oh, everything is okay and we're going to start looking to rate cuts again and start moving forward. The Fed fund futures are starting to lower their forecast for a rate cut in June. And this 520 level, we needed to get back above that. So the fact that we only closed on 520 makes me think we still need to be a little bit cautious going into next week. Everybody knows Monday we have the big solar eclipse. A lot of attention will be paid towards that. I don't really think that affects the markets at all, but it may take some of the attention away. In other words, it might be a thinly traded day on Monday, so we could have a little bit of volatility because of that. But as far as the chart itself, we've got to get back above 520. We did manage to close above the 10-day moving average, so that's a positive. But if we want to start thinking of, okay, this wave 3 still has legs, we got to close back above 520 with some follow through. So a little bit of caution here right at this major point of support resistance there at 520. So when we look at a chart of the TNX, which shows interest rates, you can see that we're in a wave 3 to the upside on rates. And I think that's a little bit concerning. I did think that this chart would relabel. And if we go back a little bit in time, you'll be able to see that the relabeling was kind of expected. I mentioned that I didn't see the catalyst to get that low, but what I didn't think is that we were going to relabel to a wave 3 to the upside. And by the way, the software is from the Hub organization, hubb.com. They have a beta version, a live Elliott Wave version of this software. So if you haven't gone to hub.com and gotten a copy of it, there's nothing to download on your computer. It's all web-based. So we're going to have live Elliott Wave charts that we'll be using in the future. So go get a copy of it. If you haven't already, there's a great social media aspect to it, community aspect. You can post your own ideas and get votes on it. It's really cool. So go give it a try. I just wanted to let you know that the labeling here is not my labeling. It's exactly as the Elliott Wave algorithm was written by Ralph Nelson Elliott. So some of you say, I don't agree with where your labels are. I don't label it. All I do is try to interpret the charts for you. It comes exactly from Ralph Nelson Elliott's algorithm. So moving in a wave 3 to the upside is a little concerning in rates. The key here was that we had resistance at 4.3 on the 10-year. We broke above that. We came down and tested it. Interestingly enough, rates actually ticked a little bit higher today, and we were still able to rally a bit. But if we start to get the 10-year moving higher in rates, that's going to put pressure on not just the big tech stocks, but the market in general. So another thing to keep an eye on going into next week. We look at the dollar. Now, one little good piece of news here is that the dollar did come back a little bit. That chart also relabeled, as I thought it might. And some of you poo-poo Elliott Wave by saying, oh, yeah, the chart relabels all the time. So it always comes in being right. Well, to me, the market is dynamic. It's not static. And if you don't have a technical indicator that you're looking at that's as dynamic as the market is, then you're going to be left behind, or you're going to be behind in making your adjustments to your trades or entering trades. So I like the fact that Elliott Wave relabels. I think that's a positive, not a negative. But when we look here at the chart of the dollar, it has relabeled. It's in a corrective phase. Now, here's where the concern is. When you take a look at this chart, you can see that, wow, if you've been watching at all, my favorite directional pattern is a zigzag. And that's a pretty qualified zigzag so far. And if we start to move back to the upside in the dollar, meaning that the higher for longer rates thing is really applying, or we have a real global recession, et cetera, either of those two things could cause the dollar to go higher. Now we start to have companies having problems with their bottom line, the profit number, due to the exchange rates, et cetera. So there's some stuff to be cautious about right now. All that could go away. We break above 520 in the S&P and we're off and running again. Rates calm down and the dollar stays in this range rather than running to the upside here in completing the zigzag pattern. Then we have an environment where the market could go higher, especially when we look at the VIX. So we had a move to the upside in the VIX yesterday, pretty significant move. We go back and look at this lower trend line here, and you can see that we broke below it. It looked like, we talked about this before, maybe we were going to go down towards 11, 12, 10, where we've been before. But now it looks like we have to go back and draw this channel line again because we broke back to the upper end of the channel. Now, we did break down today, so that's a positive from a volatility standpoint. Maybe we continue lower here in a market rally that may occur next week, or we break to the upside. But for now, we're just kind of staying in this trend channel. Broke a little bit below it, came up and tested the upper end of it. I know some of you made comments about where I draw the trend lines. I just look for general patterns. I don't get real technical on where I draw the trend lines. I look more for where the Elliott Wave patterns are. Looking at the rest of our markets, when we look at the Dow, the DIA here, you can see that it bounced back to the upside as well. But when we look at the 10-day moving average, note that on the Dow, we weren't able to recover the 10-day moving average today. So we continue to look at this area right here through 390 as the major area of support resistance. So where we need to get above 520 on the SPY, we need to get back above 390 on the DIA. And then we can start talking about breaking above 400, breaking above this wave 3 high. But we got to get above 390 first. So we came down, a nice test of the 50-day moving average. But look here, we have labeled the wave 4, which we have not done in the SPY. So that means that we could have a further correction as well. So again, that's where the caution comes in, where now's a good time to just kind of just pick and choose your spots. Find the stuff that's working and working well, but maybe not broaden out your trading and go all into the upside. Not till we see these important resistance levels broken again. Then we look at the Qs, as you would expect, a pretty rough day yesterday, back to the upside today. But look at this trading range that we're in here on the Qs, still in a wave 5, no relabeling there to a wave 3. We were wondering if that might happen, hasn't happened. So just a trading range here for the Qs, and we need to see if we can hold these lows here. You can see the low yesterday there, right around 435. Has been an area of support resistance going back to, just early February. So we need to see a breakout one direction or the other. If you're just chomping at the bit to get back long those big tech stocks, let it break above this upper trend line here. That wave 5 high is at 449. So we need to see the Qs get it back above 450 before you can feel really comfortable going hard long on anything that's in the Qs. When we look at the IWM, that wave 5 right there at the 61.8% fib extension level is also right at that 210 level. We've talked about this. Could we break above 210? Could we start a new trading range? The IWM loves to be in 20-point ranges. 170 to 190 was it for a while. And then, as you know, if you've been watching any of these recordings, we broke down from 170 to 190. but we look to be still in that range. We look at the 10-day moving average here. Again, not able to recover it even on the high today. But one thing that you'll look at on the IWM is it loves to test the 50-day moving average. And note here, back here, it tested it in January, tested it in February, came back and tested it in March. So is this we just need to do it in April too? So we have 4 months in a row of testing the 50-day moving average? Possibly and likely, I would say. And now the key will be, can we continue to hold that 50-day moving average? We do have a pretty decent set here of higher lows. So perhaps that's all that's going on the IWM, but things to watch there. Can that 50-day moving average hold next week? And then if it does, and we start to move back to the upside, you still have to wait for a break above 210 before you get too excited about the small caps. And again, a lot of people look at the small caps for an idea of risk. What's the risk appetite for the market in general? So testing the 50-day moving average maybe comes into play. All right, moving on, Bitcoin is still in this triangle. The halving comes out on April 18th, and I look at the charts of Bitcoin. I really only am familiar with a handful of the cryptos. I look at Bitcoin, Ethereum, Solana, and Cardano. That's about it. So I'm no in-depth expert in the world of cryptos, but someone that I know that is saying that this has been very normal. That if you went back and looked at the previous three halvings, every time there was a halving coming up, that we had a dip in front of it, and that this dip occurred tick for tick with the previous three. This is the fourth one. So from that standpoint, maybe you're not too concerned with what's going on with the move lower. You can see we went up and touched the upper trend line, so we're kind of hanging around that 68, 69, 70,000 level. But you can see from this triangle, something's going to happen in Bitcoin. And if you're a believer that you rally into the halving, then we're going to see a breakout to the upside. But I just want to remind you that when you have a triangle like this, you can break either direction. So we'll see how that plays out next week. And we always marry Coinbase along with Bitcoin, as you know. And look how remarkably similar the charts are. The same exact pattern in Coinbase that we have in Bitcoin with this symmetrical triangle. I know we had the negative news where they lost that one SEC case, but most people think that that's going to be tied up in court for years and will probably end up in the Supreme Court as far as whether or not they're selling unregistered securities, etc. So forget that for the short term. The short term is that we have a triangle just like Bitcoin, and I would surmise that whichever direction Bitcoin breaks is probably the same direction Coinbase is going to break as well. Taking a look at some of the stocks that y'all have interest in that you post comments about. And by the way, just as a reminder, as we go ahead and look at the chart of USO on oil, each and every month this year, we're giving away one of our L3 subscriptions at ewotrader.com, and that includes our new AI-based impulse strategy, which is our directional strategy, highly focused on zigzags within wave threes. We've had 6 consecutive months of winning alerts, not a losing month yet. I'm not going to say we're never going to have one, but we haven't had one yet. And the volatility strategy, which is for breakouts of triangles. We've had 5 in a row profitable triangles from the volatility strategy, and our AI-based time strategy, which is for stocks expected to go sideways. So it sells for thousands of dollars. You can go to our website at ewotrader.com. We're going to give one of those away free every month, and all you have to do to qualify is post a comment underneath this video. That automatically registers you for the drawing each and every month. So we welcome your comments. I read them all. I answer as many as I can based on time constraints. But now getting back to USO, you can see that oil is off and running. That doesn't feel too good if you drive cars like I do. I'm still in the big muscle car thing with a Hellcat, and not too much fun going to fill that thing up at the gas pump with oil prices going up. Now, the key is where we are right now. So we're at that wave 5 high back from September. If we can break that, then we might be looking at 90 to 100 on USO. But we're a little bit overbought right now, not significantly so, but a little bit overbought on the USO. So maybe we need to go sideways a little bit in oil and then try to break that high from September. And if we do, then and we could be looking at much higher oil prices. And again, that transfers to the gas pump. But you don't want to see it. If you're long oil or long the USO, you would want to see some consolidation here. You don't want to break a major point of resistance when you're already overbought, because those don't hold. You need to have some consolidation here, allow the 10-day moving average to catch up, gain a little momentum and energy, and then break a major point of resistance. So that's where we are right now. So maybe some consolidation next week on the USO. Looking at gold, which, holy cow, people have been asking about gold every week on TradeFinder. And if you haven't signed up for TradeFinder, you can do it on the link as you see on your screen now. We've changed TradeFinder from Tuesday night to Tuesday during the day. We do it at 1 p.m. Eastern time, so it's during market hours. And using that new hub software that has live Elliott Wave, we'll be able to look at the market live during TradeFinder. It's going to be really cool. So if by chance you haven't signed up for it, sign up for it now using the link that you have. And again, it'll be at 1 p.m. Eastern time on Tuesdays, live during market hours. So really cool. We look at the markets, we look for trade ideas, and we have a great community, live Q&A at the end. So join us next Tuesday at 1 p.m. Eastern time. So going back and looking at the chart of gold, it has been on fire. We've been waiting for a bid in gold. I thought we might consolidate here a little bit. We talked about that last night, Thursday night, during our insiders meeting, which is for alert subscribers only at ewotrader.com. Maybe we might consolidate here in this area, but not so fast. Gold said it took off again today. Now we are just a tiny bit overbought. So consolidations, when you have one of these runs, usually only lasts a day or two. But I thought we might pull back just a bit more, maybe back to 210. Didn't happen. Back to the upside. Here we go. So gold is on fire. And in this wave 3 continuing in the wave 5 forecast here. And if you're not familiar with how Elliott Wave works, this wave 4 forecast here is just a forecast. It doesn't mean the wave 4 is underway. It means if the wave 4 were to start now, that's where you could expect to find some support. But this point up here around 225 on the GLD, the Elliott Wave algorithm likes that price. Now it can continue to run there in the wave 3, and then these 4 and 5 projections will change, or we have a correction first and then a move there. But regardless, it does look like Elliott Wave likes a 225 pricing on GLD. So I don't think we're done. We're just a little bit overbought short term here. So maybe some consolidation here in the GLD would be good early next week as well. Let's look at Apple. We haven't looked at Apple for a while. Boy, that used to be one that was asking TradeFinder week after week after week. And now that it's started to come down, people don't seem to be so interested in it anymore. But it's at an important level of support here. So if you are a fan of Apple, you want to see it hold 170. It needs to hold this 170 level. Note that it's in a wave 3 to the downside. But we don't see that on Apple very often. But this level of support at 170 is key. It's trying to build a base here to which it can launch from. We have a little bit, it's kind of vertical, so you don't normally see a descending triangle with that vertical of an upper trend line, but just wanted to point that out. But the key here is 170 needs to hold, because if it doesn't, the next real gathering of any kind of support is down at 150. So if Apple can't hold 170, we could be looking at 150. And I've always commented that Apple is one stock I don't short because they have so much cash that they can increase their stock buyback at any time and really make it a difficult scenario for shorts. So I don't really short Apple, but gosh, if it breaks below 170, it could go to 150. But it hadn't done that yet. It has to break below it with a follow through. You can see it's tried a couple of times, but no follow through day. And if we can hold here at 170, maybe we get a little bit of a bounce up there towards that 180 level in Apple. Looking at Meta, which nothing seems to be able to stop this stock. I thought 500 might do it. I really did. I thought once we got up to 500, it's such a big round number, and we traded through that level for the better part of a week or a month, excuse me. And then off we go again. We got a little bit overbought yesterday on the high. It did close on the low because everything did basically when the market sold off after Kashkari's comments yesterday afternoon. And we turned around and went right back to the upside today. No harm, no foul. We actually took out yesterday's high on Meta, if you can believe that. And if you want to know, well, where can Meta go? Well, the Wave 5 forecast is way over at 650. So we look at these big round numbers. I think that's too far away to look at. But the fact that we've held this 500 level and started to bounce higher means you have to start looking at 600 as a potential target on Meta. It just, everyone loves it now. It's amazing to me because it wasn't that long ago that Meta was down here at $60. And now we're up here at over 500. It's incredible the move that's occurred in Meta, and I don't think it's done yet. Not based on what's happened these past couple of days. So if you're long Meta, as long as it stays above 500, I think you stay long. If it breaks below that, then you want to see, depending on your risk tolerance, if it can hold this level here at 480. So it's got a little corridor of support here between 480 and 500. So that's pretty strong. But if it breaks below 480, then you start thinking about, oh, we got this big, huge gap back here. In my opinion, the data shows gaps get filled. 94% based on our AI data shows the gaps get filled, but we don't know when. Sometimes it takes a while. I feel like this gap is something that'll get filled well into the future. But if it breaks below 480, it does bring that back into your thought process. But for now, no. For now, you're looking at this corridor of support between 480 and 500. As long as we hold that, you're looking more at 600 for Meta rather than any sort of a downside move. Boeing, every single TradeFinder that we've had recently, people are asking about Boeing, and nothing has changed here. We have this support level at 480. I made the comment back when Boeing was at 200. I didn't know what other bad news could come in about Boeing. You saw what the bad news was, and I'll need to reiterate that. And we came down and tested this support level from October at 180. That needs to hold here because if it doesn't on Boeing, then we have and I love the fact that y'all use this in your comments, a Katie bar the door candidate here, because we're looking at 140 down in this range on Boeing if it can't hold 180. And that's because the move previously from 140 to 180 really didn't have any sort of correction in it. It went a little sideways and kept going. So if we break below 180, there's nothing to stop it from 180 to 140. But I just kind of have a feeling that Boeing may try to hold here. It's so widely held that I don't know that that will break that 180 level. If you're looking to go long Boeing, I think you need to wait and let it break back above 200. So I think you're kind of a wait and see mode here. Even if you're really aggressive, you want to wait and see that a break above 200, and then Boeing could be off and running. If you have a long-term horizon, like if you look at leaps, et cetera, Boeing could be a long-term play there. But your stop would be a break below 180 on Boeing. But I'll say it again. Now, is there anything more negative that come out on Boeing? United has just cut some staff and cut routes because they can't get enough planes from Boeing. And the backlog, once Boeing gets things together, gets their act together, and starts delivering planes, they've got more work than they can handle right now. So maybe 180 in this area here is a nice area to look for something longer term long here. I do like to trade short term, but this could be a longer term look. We are below the 10-day moving average. We had a little doji today. We'll see what that means going into next week. And then Tesla, everybody asking about this during TradeFinder as well. And Tesla, we've just nailed Tesla. And we had 200. Instead of it couldn't hold 200, we were going to go down here to 180. And if we couldn't hold 180, which we didn't, we're going to come down and test 160. And here's another Katie bar the door candidate here. If we can't hold 160, notice we did on the low today. What was the actual low? Today was 160.51. So we tapped that low today on Tesla. And I just don't know where I can see a catalyst for the upside on Boeing. I don't really see where the catalyst is to the upside on Tesla. The demand for EV cars in general is starting to wane a little bit. They have the problems in China. They're not going to be able to market to China anymore, basically, because they've got their own EV cars and people like those. So where's the demand going to be that comes to drive Tesla back to the upside? If it can't hold 180 here, and you can see it's in a wave 5 to the downside. It did hold at 160, excuse me, it did hold 160 today, but if it doesn't hold 160, then the Katie bar the door scenario is 120 is the next area of support there on Tesla. So we'll see what happens next week, but certainly a little nail biting hitting 160 on the low today. If you're long or want to be long Tesla, if you're looking for an opportunity there, I think you're going to have to wait a while. Not only does it have to break above 180, we had the easy trade here. We talked about this in the market update a couple of weeks ago, that you could have a bounce from 160, but it would run into resistance at 180. That's exactly what happened. And then we're back down at 160 again. So to really be comfortable going long Tesla, it not only has to break 180, it has to break above 200 and then start to move back to the upside. Then you can start to look long Tesla with some comfort, in my opinion. I don't know where the catalyst comes from that could drive the stock that high, but from a technical standpoint, that's where I think you need to be long Tesla. In effort of time, we're not going to do any international markets here. We do them every week in TradeFinder. Hopefully, we'll see you live on Tuesday. Have a great weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.